On Business Lunch, I'm Nisha Podar and with me is Sonia Shenoy. Sonia, good afternoon. It's a volatile day of trade. Lots of cues really impacting the overall trading on the markets, and Nifty 50 as well as Sensex have deepened their cut in the last few minutes of trade and are down from the high point of the day. More than 0.5% down should be a worry for the markets. It's also rupee weakness and the rise in crude oil prices, which is really impacting the overall markets, apart from the several other concerns that are also cropping up. Reliance Industries, TCS, Infosys, even IT Pack today is looking weak despite weaker rupee, Sonia. So overall, market sentiment looking weakish.
It is, of course. I mean, there's no recovery at all. But, you know, individually, it seems to be the return of the laggards. I mean, look at Jet Airways, it's up 5%. Look at Yes Bank, it's up almost 7%. Punjab National Bank is up almost about 5-6%. So maybe it's just short covering in many of these names. But yes, some of these stocks are really rising from the ashes, so to speak. And, you know, there are some, there's volume-backed price recovery as well on many of these names. Let's see which way things go. For now, as Nisha was saying, the sentiment is very weak in the market. Although the advance decline ratio has improved. So we started off with the market in favor of the declines, and now that's sort of reversed and it's in favor of the advances, more than 1,400 stocks. Look at that. So let's see, things could go either way. But volatility is definitely the name of this game. Not so much in the rupee. The rupee has been moving one way, and that's downwards. It recovered a tad bit after breaching that 73 to the dollar mark. But nevertheless, it's still been hitting record lows day after day. Lata is here to give us more on that. Lata.
Well, it was always expected that the rupee would get a knock because of crude touching 85. But the announcement from the government that oil companies can take dollars directly from the Reserve Bank, or at least the buzz that they will likely do it sometime soon, has taken the sting out of the rupee bears. And there was a decent amount of short covering on the rupee, or people taking off long dollar positions. But we must remember that more than just this action, what the market is reading is the government's resolve not to let the rupee fall too much beyond 73, because every time around that level, the government comes in with a bunch of announcements, and therefore that resolve of the government is also something the market is looking up to. We also should not lose sight of the fact that the dollar index has fallen from 95.47 at the start of the Asian trading day to 95.3 now. So even the reverses that we saw in the Indonesian rupiah, for instance, it was down 0.25%, now it's down 0.1%. So even across Asia, the currencies have somewhat improved because of slight trimming of crude prices from the $85 levels, as well as slight trimming of the dollar index. That has had a salutary impact. Mildly, all of them are off lows, and so is the rupee, which has the added perhaps incentive that the government may do something about it, but far from being out of the woods.
Oh yes, Lata, far from being out of the woods, because above 73 rupees per dollar is quite a worrying level at this point for the rupee. In fact, we spoke to a whole host of experts to get their take on what's the way forward for the rupee and how it's going to impact the markets.
I reckon that the RBI will let the currency go down further. So both with oil steaming up and with the RBI saying, I want to inject liquidity into the market, I think currency traders will take an implicit signal of a cheaper rupee, which obviously bodes well for both IT and pharma.
I think if you have a current account deficit and if you have a BOP which is largely negative at the current juncture, then it's fine for the currency to depreciate. I think some of the noise around this is a bit excessive, according to me. I think this is a healthy and orderly correction and is one of the things which will eventually correct the current account deficit. I would question the merits of slowing down the entire 80-90% of the economy, which is not using imported goods, to address just one variable, which is the rupee, and where the interest rate defense, thus far at least, has not turned out to be a great example, even in the Asian context.
I think there's certainly going to be further downside for the rupee. We just recently revised our forecast and downgraded the rupee. We're now looking for weakening towards 75. And the main reasons are not only crude, but also with the U.S. set to hike interest rates further. Policy normalization in the U.S. will mean that dollar liquidity will continue to become a huge issue in emerging markets. And that will really continue to put pressure on current current account deficit countries, and India pretty much fits that bill in this particular moment in time. So I think further downside, and even at past 73, rupee is still probably still on the slightly overvalued side.
Okay, that's about the rupee, but the other big issue really has been crude. Crude prices have been firm as the US sanctions on Iran have loomed large. In fact, Brent touched $85 a barrel. It continues to trade above that, while WTI crude is at $75. Remember, Brent crude has risen 17% in the past 6 weeks. We did speak with Jonathan Barrett of Probus Securities and Bart Melek of TD Securities. Most of these companies have actually increased their Brent crude prices or their targets for the full year. So let's listen in.
Well, I think that we've got the leverages in play. I think if I was India, I would say there's a little bit of hurt, but at the end of the day, the two suppliers understand how the global economies will work, and if prices are too high, it'll slow things down, and that's what they don't want. So I think that those levers will be played out in time, and that's why I think it's a short-term issue, not a long-term issue, and hopefully prices will come back. For Q1 next year, I'll be looking for prices to be below where they are today.
$90, I think, is very much within the realm of possibility. A key reason here is we are seeing continued concern that there may not be sufficient supply in the pipeline once the Iranian sanctions start biting. I think OPEC does have significant capacity for the time being. It is a matter of question of how willing is Saudi Arabia, who in fact holds the vast majority of the spare capacity, to put new supply in.
All right, so lots of factors really impacting the overall markets. A big cue to watch is the RBI's monetary policy decision that is due this Friday. Now, the recent depreciation of rupee and all the EM currencies, including rupee, and the sharp spike in crude oil prices and fears of liquidity crunch are factors which will likely dominate the central bank's decision this time around. In fact, hear out what members of CNBC TV 18 Citizens Monetary Policy Committee, Sajid Chenoy as well as Soumya Ghosh, are expecting from the RBI's policy this Friday.
What the RBI has done so far, 25 basis points in June, in August, that should be continued because these inflation risks have increased to the upside. At the same time, for those very reasons, we should not overreact on the liquidity side. There's a well laid out liquidity policy that the headline liquidity needs to be close to neutral and that durable outflows will be met by durable injections. This has worked well for the last 2 years. The more durable outflows there are, currency in circulation, FX intervention, the more OMOs we will see. I think the CRR is too blunt an instrument because these could reverse.
In times when the financial stability is in a little bit of crisis, the FOMC takes explicit note of that and possibly mentions it implicitly in the policy statements, which may also have an impact on the interest rate decision for the Fed. So if I take that cue into consideration, the Reserve Bank obviously have the right to state in implicit or explicit terms what are the problems of inflation and stability, even though it's an inflation targeting central bank.
Okay, so that is the expectation as far as the RBI monetary policy is concerned. Of course, everyone's expecting a rate hike, but whether it's a 25 basis points or 50 basis points rate hike, that's the big debate. Let's take a short break on that note. Up next,